today I'm going to be going over SMTs, how SMTs work, what exactly do they mean, um, everything like that. Okay, so an SMT stands for a smart money technique. So essentially, this means the market makers have a liquidity sweep, we'll say. They have a liquidity sweep on the NASDAQ, but they fail to sweep it on the S&P 500. So I'll find a example for you guys of this. Right here. Someone on this day. Sometimes they can be hard to find, but the majority of the time they're pretty easy to spot. But there's not always SMTs all the time. I utilize SMTs on the 15-minute and the 1 hour time frame. Here's a perfect example of the SMT. Okay, so we're looking at our chart. Now, we have this big move down, all right? Massive move down. I think this was maybe like a 500-point move. Yeah, 600-point move down. Now, an SMT did cause this move, and I'll show you guys where it is in a second, if you can't already spot it out. But essentially, we have this massive move down, and this is a combination of, I'm sure, news and other things, but SMT plays a big part, and the SMT is going to be right here, as we can see from bearish SMT, and then over here. So you're just looking at the different pairs and seeing if we can sweep a high or not. So on NQ, we swept this high right here, right? That's a sweep. We go above that candle wick, so it's a sweep. But if we look over at ES at the same exact time, notice how when I hover over the candle, you see my crosshair, right? I hover over the candle. If you look at the bottom of my screen, it says 15:45. That's the time. So we have 15:45, look over at ES, 15:45. And then we go over to the SMT, it says 8:30 and 8:30. So that's how we know. We have an SMT, we fail to sweep it on the S&P 500, but we have a successful sweep on NQ. Now, this move is definitely a combination of multiple different factors. It's not just an SMT, but an SMT is a confluence that we can use. I use it to kind of find my daily biases in the market. And this works on any time frame, but I look for higher time frames. So 1 hour, 15-minute SMTs are going to be really strong, and that determines kind of my bias for the day. Because if you notice, we're in a very, very bullish trend. And then we create this SMT, and we're still bullish, right? But then we just start dumping, okay? So that was kind of my bias for that day. I knew we were going to have very bearish price action throughout the day just due to this SMT, especially because it was on the 15-minute time frame. And whereas if it was on the 5-minute or 1 minute, it's not going to be as strong, okay? So now let's find another example of an SMT. I'll even go to the hourly chart to show proof in the concept on the hourly chart. Do we have one on this day? I don't know. Not sure. And these don't always these don't just work for market open. These can also work later in the day, later in your sessions, pretty much any time. Like you as long as you have an SMT there, you'll be able to kind of know what the bias will be for the next, I would say, hour is a good rule of thumb. But sometimes it's kind of hard to find a SMT because you are looking at so many wicks and you can overcomplicate it for yourself a lot of these times. I'll look on this day. Do we have an SMT? Yes, we do. Perfect example. So hourly SMT. So this is pretty much New York Open, right? Right here. Previous day. What do? We come up and we sweep it. This is from 10 to 10. Now, time does matter, and it does play some factors. So notice these patterns. Notice how this was from 10 to 10. We create an SMT, right? This is a bearish SMT. And for the rest of the day, we have a 530-point move downwards for the rest of the day. This might have been the same example, but I'm just showing you guys examples of SMTs. But as you can see on the 15-minute, we created one. We create one on 15 minute, 5 minute, 1 minute. It's just a matter of scaling out. But on the 1 hour, you can see clear as day, SMT, SMT. Then we have bearish action. And now let's see, maybe we even, like if you're a top ticker, this is how a lot of these people also are able to bottom and top tick. This is not an SMT, but is this going to be one? No, we don't have another SMT, but other factors move us up. I'm sure it's because we have an order block right here, or, we have a right here on ES, we tapped into the hourly for rally gap. So there's many different reasons, but I'm not here to teach that. I'm here to teach SMT. As you guys can see, we have another SMT. It's just a big sweep on external range liquidity. So essentially, internal range liquidity is going to be, internal range. Say we're moving within this massive price range. We're moving within this 630 point price range, right? So this entire area is our range kind of for the day. Notice how we break out. This becomes external liquidity. This high becomes external liquidity, and then we come back in and we're taking, internal liquidity throughout the day. We don't really care. This is internal liquidity within this entire move. And then look, the next day we break that high, that external high that we had before, and we just continue to dump. Okay? And we just continue to dump back to this area that we were at before, which was going to be internal, and then we're creating another leg move up, leg down, leg move up, internal liquidity, external liquidity, internal liquidity, external liquidity. Actually, no, this wouldn't be external. It would be more like stuff over here. Or I think we are all-time highs. Yeah, so we're on all-time highs. You can't really do external and internal liquidity. You can do internal, but external just doesn't work as cleanly. So yeah, SMT is kind of a sweep of, I call it liquidity. I don't know how it's truly defined, but it's a smart money technique where we sweep a high. I like to do only external liquidity. If it isn't external liquidity, it's not as strong, but we have a sweep of external liquidity, as we see right here, on within, this is my kind of time frame from 8 to 10. So from pre-market to 10, if we don't have an SMT, then I'm looking for something else to confirm my bias. Okay, but as you can see, we have this prominent high. This is external liquidity. We create an SMT at 10 o'clock, exactly what I needed. And then what do we do on it? What do we do on ES? Prominent high. We do not sweep this wick. So now we're just going to, even though we're in this very bullish structure, we did have this drop and we did invalidate this gap. So you might be thinking, we're going to push really high. But no, just because we're in a bullish structure doesn't mean we can't create an SMT and capitulate all the way to the downside for, how many points is this? For 760 points. Okay, so that's all I really wanted to go over. SMT, it's a pretty easy concept once you get it down. You're just marking it out wick to wick, the top of the wicks. You have to wait for a close. You cannot just, put them down if the candle's still moving. You have to wait for a close in the market. Okay, so we're waiting for closes on the 15-minute and the 1 hour time frame. That's how I determine my buys for the days. If we have, a bullish or bearish SMT. If we have bearish, then I know we're going to be bearish for the rest of the day. And if we have a bullish, I know we're going to be bullish for the rest of the day. Okay, that is my teaching on SMT, and I'll see you guys in the next video. I'm going to do IFVGs.